James Paulsen is the Chief Investment Strategist at Wells Capital Management, where he helps oversee $375 billion in assets. He's been named top economic forecaster by Business Week, and Bond Week twice named him interest rate forecaster of the year. Hi, Jim. Great to see you.
Good to be here, Lori.
So what's your take on this fear factor perhaps influencing the markets?
Well, I'll tell you what, the last year or 18 months, fear has been a constant. The fears, the actual specific fear, keeps changing every few weeks. The current fear du jour is Europe, but the level of fear has been a constantly high ever since the crisis. Right, we're kind of in a post-crisis psychosis in this country, I think. And from a standpoint, I think it's a good thing. The contrarian in me says, as long as everyone's so nervous and hunkered down, that means they still got a lot of excess buying power on the sidelines that could still be enticed into this market.
But is there a question about who's doing the buying, right? Let me read you a line from our in-house economist, Rich Yamarone. Small investors have all but given up, leaving hedge funds and traders to swing the markets back and forth on a daily basis. Do you agree with that? And if so, isn't that kind of a problem? I mean, we had such a run-up yesterday, and now this. I mean, volatility, right? That's been the ongoing theme.
Yes, you know, the volatility is tiring. I agree with that. I even agree that there's some days when I think the markets themselves are leading the fundamentals on Main Street rather than reflecting the fundamentals on Main Street, which they should be. So there is some of that concern, but I think at the end of the day, Lori, I guess I think fundamentals are going to win out, and the fundamentals on the ground yet are still fairly decent. Whether we're growing 3 or 4%. Profits are still growing. You know, interest rates are low. There's still a lot of cash in the sidelines. I think that is what, as an investor, I'd like to keep my eye on, rather than what the next Armageddon around the corner might be.
Okay, so then what's your advice for navigating these choppy waters of the day? What would you do if you had some of this cash, if you perhaps do, on the sidelines? What do you do with it?
Well, I think that people ought to chip away as we're down here about 12% off the recovery highs here at some of the cyclical sectors, which is really taking a pounding on the fears that we could double dip. And maybe give yourself, if you buy today, how will you feel a year from now rather than next week? Because who knows how long this could continue. But I'd pick away at my favorite sectors right now would be the materials, the basic material stocks. I like the energy stocks right now, not necessarily BP per se, but the energy stocks as a whole. I think that the technology offers a lot of possibilities. And then last one, I'd pick away at the financials, which have pulled back in here as well.
So then give me an idea of what your asset allocation pie looks like. I mean, are you that optimistic on stocks?
Yeah, I'd be pretty overweighted stocks because I just don't see much value in much of the bond market, or certainly not cash. You want to have some, and you should always have some of all those asset classes, but I'd minimize my cash holdings right now, and at least my high quality bond holdings, and I'd be looking more in the risk asset areas, because it might not be that great for the next month or couple months, but I think over the next couple years you'll be happy if you fight this fear urge that you feel in your gut.
And that fear urge, you talked about fundamentals driving us out of this time of volatility. So can you give me a time frame for when we might enter the next stage of this economic cycle?
You know, I think, Lori, that we're going to do it fairly soon. I think we're going to go on. My guess is we're going to be at new highs in the S&P for this recovery cycle before the year is out. I kind of think that between now and the next couple months, unemployment claims, the weekly unemployment insurance claim numbers, are going to head down towards 400,000. And we're going to kind of put to bed this idea that we've stalled in creating jobs. If we do that, then I think a lot of these fears about Europe and otherwise will start to fade, and people will refocus on the idea that, gosh, we got job creation, we got profitability, we got spending trends, and I think greed might come back into this marketplace as people look at these values around 12.5 times earnings with a growing economy.
Jim Paulsen is the Chief Investment Strategist with Wells Capital Management. Thanks for coming on today.